Ladies and gentlemen, good day and welcome to Kewal, Kiran Clothing Limited Q2 and H1 FY24 conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation which Kewal Kiran Clothing Limited has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Kewal Kiran's business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand over the conference to Mr. Hemant Jain, Joint Managing Director. Thank you, and over to you, sir.
Yeah. Good afternoon. Can I start? Good afternoon. On behalf of Kewal Kiran Clothing Limited, I welcome everyone to the Q2 and H1 FY24 earnings conference call of the company. Joining me on this call is Mr. Pankaj Jain, President Retail and our Investor Relations Advisor. I hope everyone had an opportunity to look at our result. The presentation and result release have been uploaded on the stock exchange and our company's website. As you may be aware, we have launched our kidswear focused brand Junior Killer. Foray into kidswear is in line with our growth strategy to build a comprehensive portfolio across age group and gender. The brand offers extensive range of clothing for kids across casual, sports and classics from the age of 4 years to 16 years, while the brand Killer will continue to offer product for 16 years and above. This move marks brand Killer becoming a for to forever age group brand. Now coming to our financial performance in the Q2 and H1 FY 2024. I am delighted to share that we have continued our growth momentum, registering increase of 16% in Q2 FY24 compared to Q2 FY23 from our operating revenues. We achieved an impressive EBITDA margin of 23.5%. Our PAT of rupees 49.7 crores in Q2 FY24 clearly demonstrate company's business and model strength. The growth in sales was backed by a healthy volume growth of 19.2% across apparel and accessories, demonstrating the designing capabilities of the company and strong brand acceptance. This robust performance, despite a general slowdown in the market, reflects the company commitment to providing customers with a superior fashion experience, rapid response to the changing market conditions, along with effective execution of our growth strategy through brand building, network expansion, and category extension. We have also been strategically opening brand-focused EBOs to tap into the untapped market and widen our customer base, enabling us to enhance our market presence and increase accessibility for our target consumers across India. Continuing our strategy towards expanding exclusive brand-focused EBOs, the company has had a net addition of 22 Killer brand EBOs during the quarter, taking the total tally of Killer EBOs to 271 and overall EBOs to 470 EBOs at September 30, 2023. Further work on additional identified 49 EBOs is ongoing and expected to be launched in coming months. Now, coming to the financial performance highlights. Stand-alone performance highlight for Q2 FY24. Revenue from operating for Q2 FY24 grew by 16% to rupees 262.5 crore as compared to 226.3 crore in Q2 FY23. Gross profit grew to 111.9 crores in Q2 FY24 as compared to 93.7 crore in Q2 FY23. Gross margin for Q2 FY24 increased to 42.7% as compared to 41.4% in Q2 FY23. EBITDA for Q2 FY24 grew by 23.4% to 61.7 crore as compared to 50 crores in Q2 FY23. EBITDA margin for Q2 FY24 stood at 23.5% as compared to 22.1% in Q2 FY23. PBT for Q2 FY24 grew by 36.8% to 66.2 crores as compared to 52.3 crores in Q2 FY23. PBT margin for Q2 FY24 stood at 24.5% as compared to 22.5% in Q2 FY23. PAT for Q2 FY24 grew by 27.2% to 49.8 crore as compared to 39.1 crore in Q2 FY23. PAT margin for Q2 FY24 expanded to 18.4 crore as compared to 16.8% in Q2 FY23. Now, standalone performance highlights for H1 FY24. Revenue from operating for H1 FY24 grew by 15.8% to rupees 440.9 crore as compared to 380.9 crore in H1 FY23. Gross profit grew to 188.7 crore in H1 FY24 as compared to rupees 160.5 crore in H1 FY23. Gross margin for H1 FY24 expanded to 42.8% as compared to 42.1% in H1 FY23. EBITDA for H1 FY24 grew by 20.8% to rupees 95.9 crore as compared to rupees 79.4 crore in H1 FY23. EBITDA margin for H1 FY23 increased to 21.7% as compared to 20.8% in H1 FY23. PBT for H1 FY24 grew by 37.2% to 107.7 crores as compared to rupees 78.5 crore in H1 FY23. PBT margin for H1 FY24 expanded to 23.4% as compared to 20.3% in H1 FY23. PAT for H1 FY24 grew by 37.7% to 83.6 crore as compared to 60.7 crore in H1 FY23. PAT margin for H1 FY24 increased to 18.2% as compared to 15.7% in H1 FY23. We may now begin the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Kapil Jagasia from Nuvama Wealth Research. Please go ahead.
Hello. So first of all, congratulations on great set of numbers.
Thank you.
My question was on this shirts category where the growth has been kind of flattish this quarter. So would need any color? Is it on account of realization decline industry-wise or some shift in demand for the category itself at the industry level?
Hello. We are the second quarter. If you see, there is an other category which comprises of winter wear. So we consider top wear as a category together. So that's the reason you will see that for the September period where my primary dispatches for winter wear had already started, it will we will look at top wear as a contribution, not shirt in isolation.
Okay, so usually Q2 would remain as it is, but Q3 the shirts contribution would be going up, right?
No, the Q3 generally the shirts contribution goes down and the winter wear category moves up. But here, since there was a shift over structure, the winter wear has started from the month of September. So that's why you'll see that the number. That's why you'll see that the number of winter wear has gone up during that period.
Okay, got that. My next question is on the Kewal stores. What would be the outlook on it as we have closed around 40 Kewal stores over the last 1 year? I know most of it would have been converted into killer EBOs, and now you are also looking at some large size Kewal stores. But just for our reference, what would be the number of these Kewal stores by end of FY24 and also beyond that?
So we are trying to continue with the number of Kewal stores. So what is happening is in the revamping, as the stores are maturing, some of the stores are getting converted to killer stores, and there is a shift over, and we are on the path to make the Kewal stores on a bigger format store. So that working is also going on. So there will be a shift in the grouping possibility. That's a possibility. But we are trying to maintain the number of stores as far as possible for Kewal stores.
Okay, so any number here, what would be the closures or additions of Kewal stores for this particular year?
So on the number of stores perspective, I show that Kewal on the individual level, Kewal has been closed down by 28 stores and Killer have been opened by 49 stores.
Okay, fine. And just by this last 1 year's store-wise structuring, now which format is giving better results? So would that be individual EBOs, or killer EBOs, or that would be Kewal individual?
The individual stores are giving better results.
Okay, and this large size Kewal stores, how that would come into picture here then once you start opening that?
See that happening, or maybe in the next year perspective, not in the current year.
Okay. And just this last question from my side. Now, when would Killer Junior sales start reflecting in our numbers?
As far as Killer Junior is concerned, so we just launched, but उसका sale will happen in the quarter 4. जो first sale start होगा वो quarter 4 से होगा, last quarter से start होगा, and ऐसा है कि कोई भी brand को settle होने में at least we need at least 3 seasons. So right. As far as number is concerned, we will give you after 3 seasons. क्या तो कोई भी brand को settle होने में थोड़ा time भी लगता है. कुछ चीजें हमारे से कुछ गलती हुई रहेगी तो उसको correct करने में या मार्केट एक्सेप्टेंस होने में मिनिमम यू रिक्वायर्ड 3 सीजन. तो जो भी नंबर्स होगा हम आपको 3 सीजन के बाद ही बता सकते हैं.
Sure, sir. That helps a lot. Thanks a lot. Thank you.
Okay. Thank you very much. The next question is from Priyanka Trivedi from Antique Stock Broking Limited. Please go ahead.
Thank you for the opportunity and congratulations on the good set of numbers. So my first question is on. Yeah, am I audible? Yeah. So my first question is on the margins. So our EBITDA margins have improved by almost 142 basis points for the quarter. So what has driven this improvement, and is this sustainable in the coming quarters?
Hi, Priyanka. The total number is a composite number. Okay, okay. Okay, it contributes one because of there has been an improvement in the gross profit margin, that aspect, and little bit on the operational aspect where the operational synergy is giving me a 50 or a 0.75 bips perspective, which overall contributes to the total value.
Okay. And is this sustainable in the coming quarters as well? Should we build in a similar expansion in the coming quarters?
We'll try to sustain it, but general guidance from our side would be 18 to 20% EBITDA only.
Okay, got it. My second question is, what has been the ASP and the ASP growth in apparels?
Apparel numbers are not directly given. Okay, it's a composite number which we do give, where it consists of apparel as well as accessories. But I can tell you that there has been a growth in volume as well as realization.
Okay. And lastly, my third question is that our working capital cycle has improved significantly in the last 2 quarters, driven majorly by the inventory days. So what has driven that, and is it expected to continue in the coming quarters as well?
Yes, Priyanka, we generally say that the working capital cycle will stay between 120 to 130 days period, which is right now as of today. So we think we will be able to maintain this.
Okay, got it. Yeah, that's it from me. I'll come back in the queue. Thank you.
Thank you very much. The next question is from the line of Varun Singh from ICICI Securities. Please go ahead.
Yeah, thank you, sir. Congratulations on great set of numbers. So my first question is on non-retail channel revenue decline. So how should we read this number? If you wish to share any color on this. Hello?
Yeah. Just a moment.
Yes.
Yeah, sorry. Okay, you are looking at the numbers in terms of percentage. Absolute numbers have not gone down.
Okay, so what is that number? I mean, if you compare retail channel revenue compared to non-retail channel revenue, year-on-year growth?
See, we give a composite mix percentages only, Varun.
Yes.
Okay, so the absolute numbers for both the channels have not gone down.
No, because basis my computation, that number has gone down. So I was just wanted to understand if there is any mistake in the number that I am working out.
Yes.
So what would be your number?
The absolute number has not gone down.
Okay. So you are saying that there is a growth in both the channels?
Yep. On the quarter-and-quarter perspective also, as well as on the half-year perspective also.
Okay, no problem. I'll just cross-check my numbers. My second question is, you expect next 2 quarters, you'll be able to drive 18-19% kind of year-on-year revenue growth given the current momentum. I mean, this quarter we could grow at 16%, but still given festivity and Durga Puja, which has shifted from Q2 to Q3. So given all this background and context, more number of wedding days, etc. also in second half. So what would be your hunch with regards to the revenue growth that we have clocked in the first half compared to expectation in the second half?
Varun, we have grown by 16% on the revenue perspective, and we are confident we'll achieve this kind of growth. Okay, in the next quarters, maybe or the next half year also. Our guidance has been 18% full year growth, and we are looking at achieving that. But it also depends on how the winter season plans out, as well as how the new categories perform. But we are trying to achieve our guidance.
Okay, so the ask, to achieve 18% rate, the ask rate for second half, which is 18 to 19%, you think that's there is more than 90-95% chances of you being able to deliver that number?
They are trying our best to do that. कैसा होता है कि देखिए आपने जो नंबर्स हम जो कमिट कर रहे हैं ना, तो हम लोग ट्राई करते हैं. देखो बहुत सारी चीजें है ना सीजनली भी डिपेंड होती है. जैसा भी विंटर्स, अगर विंटर अच्छा हो गया 100% बहुत नंबर्स 100% अच्छी हो जाएगी. तो नॉर्मली जब हम बात कर रहे हैं आपके साथ कि 18 से 20% ग्रोथ की, तो वी आर ट्राइंग टू अचीव दैट. ऐसा नहीं होगी उससे नंबर नीचे गिरेंगे, बट लगभग हम कोशिश करेंगे 95% की वो नंबर अचीव हो जाए.
Understood. And sir, my next question is on the size, the store size. You mentioned in the PPT that you would be looking for a bigger format of K Lounge store. So just wanted to understand over here that on the first part, why we started rationalizing the K Lounge store with the brand Killer, assuming that Killer has a larger brand pull and more focused, larger appeal or more brand awareness. So my understanding was that it's a right approach to do that. But now, I mean, so how should we look at the aspiration? What is the need for a bigger size K Lounge store going forward? If you can give some strategic insights over there.
क्या होता है हर बार है ना कुछ ना कुछ बिजनेस डायनेमिक चेंज होते हैं. व्हेन वी से K Lounge is the mixer of all our KCL brands, and we want to launch more categories also. So in future we say, जब मैं बात कर रहा हूँ कि मैं K Lounge के स्टोर की साइज बढ़ाऊंगा, तो I will put all my brand and all my gender, all my categories. तो उसके लिए we need a bigger size of store. So next year onward we are trying भी अभी हम लोग एक टीम सेट कर रहे हैं कि एक बड़ा स्टोर स्टार्ट करते हैं. And we don't want to keep dependent on the others. कि आज हमारा EBOs जैसा सिंगल ब्रांड है, तो we need a certain square feet sizes का. Killer dependent on 700 to 1000 square feet. For the single brand it is okay, but when we say कि हमारे को सारे ब्रांड एक साथ करने हैं, और तो then we need a bigger size stores, and we want to involve some more categories also. So in future है कि K Lounge will be a bigger size store, and individual brand store will be the smaller size stores.
When you say bigger size, that means what? From 700 it would be 1000, 1200.
Then I will come back to you. We are working on that कि अभी हमको K Lounge बड़े format stores में खोलने हैं.
Varun, we are still under that incubation stage scenario for that. Okay, what has happened is, okay, the first K Lounge was opened in the period of 2005. Okay, it was a competition to a pure MBO. You will see that, okay, over a period it was competing with the tier 2, tier 3 cities, that MBO stores. That MBO has also evolved over this period and has started going into shop and shop. Okay, where the brand cycle came into picture, that's why we shifted our entire perspective to a MBO store, exclusive format stores. Now, K Lounge is somewhere in between which has to fight. It will again be a competition to that family-owned stores in the tier 2 and tier 3 city only.
Understood. And sir, my just last question is, so what is the aspiration that whatever incremental store addition on an annual basis that we wish to do, what percentage would be Killer and what percentage would be K Lounge?
As we are saying, net which used to be around, where we are saying is around 80 to 100. This year it will be close to around 60 to 80 stores.
Sorry, 60 to 80 store of Killer.
60 to 80 stores on a net basis. You needed the net number, right?
हाँ नहीं मैं बोल रहा हूँ नेट नंबर में K Lounge का कितना स्टोर ऐड करेंगे और किलर का कितना ऐड करेंगे?
We are looking at adding up K Lounge stores anymore.
Sorry sir?
We are not looking at adding up K Lounge stores anymore.
Okay, but then you said bigger format K Lounge store.
Which is for next year.
हाँ नहीं मैं वही next year का ही पूछ रहा हूँ because we have to build in our estimates also. So next
perspective, I am saying that okay, the project plan is still on paper. Where I am saying that it will be a competition to a purely a MBO in a tier 2 and a tier 3. So exact numbers, how the store will happen, what type of styling, what contribution category makes, I'll give you after. Okay, maybe in the next year perspective.
ठीक है, understood sir, got it. Thank you very much sir, and wish you all the best.
Thank you very much. The next question is from the line of Sahil Doshi from ThinkWise. Please go ahead.
Hi sir. So firstly, congratulations for good performance despite the Diwali quarter, meaning this month getting shifted. Just on this store opening, wanted to really understand. Firstly, I think we've reduce the aggression or the aspirations of opening around 100 odd stores a year to around 60 to 80. So why is that so? Is it because of the market dynamics, or it's because of this re-strategy of K-Lounge and the killer strategy?
Sahil, most of the stores generally, when we say we open are a franchisee and franchisee operated. So market sentiments do play a role when we go and pitch in. There are number of stores which are under development, but the closure is happening, taking a little bit longer period.
Okay. So aspirationally 100 odd stores a year, that target remains. I understand a quarter or two delay because of
target for this year, which was from 80 to 100 to a 60 to 80.
Okay. And incrementally for the next couple of years, if we have to see, we will maintain the run rate of 80 to 100. Is that the right number?
The new format picture of K-Launch will also be there in place. So definitely we are looking at 80 to 100 in the coming years.
Okay. Understood. And when I see the first half, the K-Lounge number, which is we've reduced roughly 44 odd stores in the first half. Is it that the K-Lounge stores have got converted into killer EBOs, or you vacated those geographies of the store itself?
Some of them. Most of the stores. So the entire aging of the stores in K-Launch, and most of them are higher than, all of the stores are more than 3 years period, and most of the stores are more than, 75% of the stores are more than a 5-year period. So we are revamping the strategies and structures for them.
Okay, so it's not that you vacated the premise or the location, you've converted them into a killer store.
Some of the location would have got vacated, but instead of that, a killer store would have been taken that place in that city.
Okay, understood. And what is the strategy on this other brand EBOs? Because we've also seen 5 odd store closures in the first half again.
Not vacated the city, I may have vacated that location.
Okay. And on the other brand EBOs, where we've seen 5 stores in H1 close, what's the strategy on this other piece?
Yeah, we are still, that other brand stores are still under that pivot stage to justify their numbers. So, unka aage growth ke liye, the number of stores opening, we were still on the deciding phase.
Okay. So when will we be in a better position to roll out or just share the strategy on the store opening?
Which will be open out on the next 6 months basis will be only killer stores.
Okay, understood. So the other question was on, because of this shift in the festive month, is it right to say that the stocking up by MBOs, etc., would have got delayed? And that's why on a first, this quarter or so, if we see the non-retail growth, it's only 5%. So that,
can you repeat the question? I couldn't get that.
No, so if I see the non-retail, which has the MBO, the growth in this quarter is roughly 5% in absolute terms. Is it because there is a shift in the festive month from October to November? Is that the reason?
Okay. And non-retail doesn't only comprise of MBO, it comprises of 3-4 numbers. Okay.
Sure.
Okay, there could be a little bit shift over. On the one of the mix of that channel.
Okay. Meaning the question what I was trying to get at is that the entire impact of the festive will possibly get shifted from October to November, and hence.
That's a likely number. Okay, if we compare the Q2 and Q3 together, we'll have a better picture and better understanding of the numbers. That's true, Sahil.
Okay. And just one clarity on the other income. Now that has become 20 odd crores in H1, right? And even we saw in Q1 and Q2, the number is quite elevated. What is the composition of this, and how sustainable is this?
Which number are you talking about?
If I look at the other income,
it has a direct correlation with the debt markets. So the debt markets have improved, and that's the reason. It has a direct relation with the debt markets.
Okay, there is no other one-offs in this other income at all.
No.
Okay, understood. And just a final request. This is basically, can we possibly bifurcate the volumes of apparel and non-apparel, because that is actually changing the entire dynamics, and it's very difficult to understand the kind of realization growth and the SSG growth we could possibly see.
But okay, looking at the competition perspective where most of them are unlisted, I refrain from giving such numbers.
Okay, with or an indicator number at least if you can just give, that will also be really helpful.
It would be one and the same, Sahil. Okay, let our management evaluate the perspective and then get back to you on this question, maybe in the next quarter.
Sure, sir. Thank you so much and best wishes for the quarter ahead. Thank you.
Thank you very much. The next question is from Shrinjana from Ratnatraya Capital. Please go ahead.
Hi, thank you for the opportunity. Firstly, congrats on a great set of results. I have a couple of questions. So first is on the gross margin side. I wanted to understand the movement in the gross margin. So compared to last year, our gross margins has improved roughly by around 1%. So is that because of material cost benefits, or is there some because on the mix side, if we see, the share of winter wear has increased, right? So that should have a negative impact, but the gross margins have still increased. So
you're right. You're rightly said. Okay, it has improved by more than 1%, and it is because of the price bracket changes. Yes.
Sorry, the price market.
It's because of the price bracket.
The material cost, because the cotton prices have come down. Is that correct?
That is right.
Okay. Thank you. Just one more question. So, this year our winter wear sales have come early. Is that the reason why our inventory has gone down, like even on absolute terms?
Winter wear is the entire buyout category. Definitely there has been some preponement on that. Okay, but winter wear major sales would be during the third quarter scenario.
Okay. So the others category, the sales, 30 crore odd sales, which is in the others category, that is not winter wear. That includes other
winter wear and accessories.
So it would be primarily, like, what would be the largest part of that others category?
Winter wear would be a larger part.
Okay. And the inventory improvement, that's just because this quarter has gone well. Is that correct?
There were improvement. See, we track it on a working capital cycle. So on not exactly on the inventory based structure here.
Okay. Thank you.
Thank you very much. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hi. Congratulations on great set of numbers. I had a couple of questions on where do you see the channel mix changing for you, let's say from non-retail to retail, and what kind of working capital changes do you see when you change, let's say, from non-retail to retail? Hello?
Yeah, the category contribution, we say that, we feel that retail will grow at a faster pace, so it's going to be at a 50-50%.
And what kind of working capital differential is there between the two? Like, what kind of working capital do you entail in non-retail, and what kind of working capital do you entail in retail?
Almost similar. Since retail is mostly on a FOFO basis, working capital requirement almost is similar.
Got it. And if you can just explain the store economic differential between FOFO and COCO store. And since a little new to the company, I just wanted to understand what kind of billing is done to the FOFO store and what kind of billing happens, let's say to the COCO store, and what kind of inventory capex do we do, and what kind of revenue per store we expect from these companies. Like,
everything is done by the franchisee. FOFO, everything is done by the franchisee. COCO, everything is done by KKCL.
What is the typical capex plus inventory per store?
So on a store size structure, we said 2,000 rupees capex, 2,000 rupees a square feet capex.
2,000 rupees per square feet capex, 2,000 rupees per square feet inventory. Is that right?
Yep.
And what is the sales per square feet according to you in the retail format?
Okay. But on since the rental perspective on FOFO stores vary from wide variation, since I'm operating in a tier 1 to a tier C, D perspective also, okay, we generally see that, okay, per store revenue is around 80 lakhs rupees in MRP.
80 lakh rupees per year, right?
Yeah, per store.
Got it.
जब आप छोटे स्टोर्स में काम करते हो ना, तब पर स्क्वायर फीट रिटर्न नहीं देखा जाता है. जब वंस यू आर वर्किंग विद 20-25,000 और 50,000 स्क्वायर फीट, वहाँ पे वर्क पर स्क्वायर फीट आपको रिटर्न देखना चाहिए. छोटे स्टोर्स में क्या होता है, समटाइम द स्टोर इन द सिटी इज वेरी गुड एंड द स्टोर साइजेज इज स्मॉल, तो आपका है ना पर स्क्वायर फीट रिटर्न ज़्यादा अच्छा आता है. तो आपको है ना पर ईयर, जब व्हेन वी प्लान, जब हम कोई भी फोफो मॉडल प्लान करते हैं, तो हम ये देखते हैं कि उसका रेंटल उसका खर्चे के साथ में वो 80 लाख का उसका एमआरपी सेल आ जाना चाहिए.
We monitor it more on the ROI basis of what the investment has been done by the franchisee.
तो आपके हिसाब से पेबैक क्या होगा अगर आप कोई नया स्टोर डाल रहे हैं?
2.5-3 years period.
2.5-3 years का आपका पेबैक है. और आपके जो नए स्टोर्स आ रहे हैं सब पोको में कैसा रहेगा? 60 to 80 स्टोर? बोथ और ज़्यादातर मिक्स पोको में रहेगा?
Majority of the will be FOFO.
So for this year है ना, the company strategy is 85% FOFO होगा और 15% कोको मॉडल होगा. जो हमने जब आप लोगों से बात की थी, तो मैंने यही बताया कि 85% should be the FOFO model and 15% is the कोको मॉडल.
तो आपका जो 18 से 19% रेवेन्यू ग्रोथ
इसी लाइन को कंटिन्यू करेंगे.
तो ये जो आपके 100 स्टोर आप जो ग्रॉस बेसिस पे खोलना चाह रहे हो, आप मतलब यू कंटिन्यू दिस फॉर FY25-26 आल्सो?
Yes.
ठीक है सर, थैंक यू.
Thank you very much. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, any reason for declining the store addition from 100 to 60 to 80?
There is some disturbance on your side.
Am I audible, sir?
You are audible, but there is someone in the room of yours where, okay, I can't hear you properly. There is some second noise also along with you.
Am I audible now, sir?
Yeah, that's better.
Sir, just wanted to check, sir, any reason for, declining the store addition for the year from 100 to 60 to 80?
So the reason I've already covered. I said that since the market was sluggish, okay, the closure took a little bigger time. So we were not able to, we still have stores under development, okay, but the closure with the franchises took a little bigger time.
Okay. And so what was the same store sales growth for the quarter?
Half yearly from April to September, okay, where the season, we are not comparing the season right now, we are comparing the day-to-day scenario, okay, the like-to-like growth was around 1%.
Okay, just 1%. Yeah. And sir, any idea about how industry has grown?
I'm not too sure about the numbers, but Puja was extremely good for everyone.
Okay. And sir, any idea why shirts have grown only 1%, wherein T-shirt have grown almost double digit?
It's a category mix where we look at top wear and bottom wear as a category structure. So bottom wear, either it falls in the shirt wear or T-shirt wear or a winter wear. It's a mix of everything. Top wear to bottom wear ratio has to be maintained at a store. This is what we follow.
Okay. Good, sir. Thank you so much.
Thank you very much. The next question is from the line of Pawan Kumar from Ratnatraya. Please go ahead, sir.
Yeah, sir, congrats on your results. I just wanted to check specifically on the shirts category. If our volume growth has not been that much, is it the price point that is the issue, or is it the styling, or what do we think we can actually get better on? Hello. Yeah. Sure. How can we get better on overall? That's my question. And should we be expecting better rates, growth rates?
We look at the top wear and the bottom wear as a category structure, and we feel that we have done adequately well on the top wear also. Okay, yes, the mix has changed a bit in the top wear category, and we look forward, okay, it will be able to capture it betterly in the next quarters also.
Okay. So, according to you, how much has been the top wear growth?
इधर आ गया 4, 51, 55 था, 55 and 9.
On the exact number, I'll get back to you on some time, but there has been a growth on the top wear category also. So you are comparing on the shirt to shirt as a category, t-shirt to t-shirt as a category, but sweatshirt and jacket is also there as a category which falls in others.
Okay. Sweatshirt and what else did you say, Pankaj? Jackets. Okay. That's fine. And do you think, Pankaj, I understand we have done very good growth this quarter, but let's say, do you think the entire festive season demand has been captured in this particular quarter, or because it is late, do you think there is a substantial part left to be captured even in the next quarter, which might turn up even in the next quarter?
Okay, most of it has been captured, I would say. But third quarter, as we said, okay, the guidance perspectively for quarter 3 guidance, we stay on a guidance that okay, the quarter 3 will try to achieve okay on a 18 to 20% perspective, looking at the sluggish demand.
Okay, I got it. Thank you, Pankaj. Congrats on great set of numbers.
Thank you.
Thank you very much. The next question is from Pritesh Chadha from Lucky Investments. Please go ahead.
You mentioned that the LTL growth was 1%.
That's right.
So which means the most part of the growth that we have seen is all distribution-led growth.
Why would you say that? I'm saying L2L growth was in terms of retail stores.
Okay.
Okay, was at 1%.
Okay, so then the residual growth is largely coming from the store additions, right?
Hello?
I said the residual growth is coming from store additions?
No, I'm saying when there is an like-to-like perspective around 1%, I'm comparing it on a September basis. Now, on the retail perspective, last year the season was in the month of September, and this time it is in the month of October.
Okay. I understood, sir. The other thing is, now for some quarters we obviously tend to do margin which is higher than the range. But let's say, when we did these changes that we brought in about a couple of years back, now those whatever changes are settled in your operations. Is it possible that once your scale improves, you can head back to your higher margins which we had seen some 7-8 years back at about 24-25%, or whatever changes that you brought in the last 2 years makes a case that the margin profile of your business is now 19 to 20 only?
Pritesh, we are okay. Given as a guidance, we will like to stick to close to around 19 to 20%. Any addition to our EBITDA, we will like to add it to marketing.
Okay, so this is a slightly longer view that you are taking, right? I am not asking you about a quarter or two.
No, it's a longer view perspective, yes.
Okay. And just one more last question. This time there was a season shift that we are seeing. Any comment that you want to put on the double-digit top-line growth that you delivered for this quarter?
But what exactly are you asking, Pritesh? What comment are you looking at?
In sense, the key reasons, if you want to highlight for the double-digit top-line growth, or the key drivers.
It's in line of what we predicted to.
Okay. Okay. Okay, sir. Thank you very much and all the best to you, sir.
Thank you.
Thank you very much. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
Sir, three questions from my side. If I look at the receivable days, they have increased substantially. Given the mix change towards MBO and franchisee stores, that's bound to happen. But are you also seeing, because of the slowdown in the market, you are facing some challenges in receiving money from your vendors, from your partners?
My my net working capital has in fact, as committed, has been around 120 to 130 days, which is still the case.
Sure, sir, but my question is purely on receivables, not on inventory.
So receivable for a half year perspective last year, and it's in line with last year's half year perspective.
Okay. Sir, in your opening remarks, you put out a comment that your mix in apparel, your ASPs also increased out there. Given that the commodity costs have corrected from the peak since last 1 year, are you planning to cut prices now? Because you didn't even increase prices substantially the way competition had increased. So do you think the gap between you and competition now, given that they have cut prices by high single digit or near double digit, you can be forced to cut prices going forward in the next season?
Right now, we are not feeling that pressure of prices yet. Okay, so we don't look at cutting our prices down, at least for the next 2 quarters.
Sure. And sir, lastly on your trade margins for franchisee, what are the franchisee trade margins and why is it taking time to close franchisees? Is 2.5 to 3 year payback period for franchisee not good enough? Previously, they used to make more money. Or have you changed your trade terms with the franchisees where the trade margin has actually reduced?
Okay, I have not changed any trade terms for the franchises, but definitely they look at the market opportunities, market sentiment scenario in picture. So that is taking a higher time structure also.
So typically, what is the trade margin we give to franchisees on a FOFO model?
I don't specifically give that disclose that margins to anyone.
Okay. And so gross margins from here, do you see they can improve given the way commodity prices have corrected and you are not tinkering with your price points?
I'm not looking at any incremental perspective. So even there is a price increase on our side, structuring happening, GP is going to remain similar, which is as of today.
So but commodity prices have corrected, right? So ideally they should expand.
Yeah, but I have not increased the prices earlier. So I was taking that bit perspective on my head, and right now I am looking at an increase in price bracket also. So when both are happening together structure, I am not looking at a faster increasing perspective on a quarter-on-quarter basis. It's a slow and steady process. As I get opportunity, I will increase the price.
But even if you don't increase prices, last year you took the hit of commodity inflation. This year getting the benefit of commodity deflation happening. Ideally, your gross margin should expand, right?
So what you're saying is absolutely right, but when last year I didn't have to give higher discount perspective. When customers or when the competitors decrease their prices, or there is a change over the price average, then there is a price war, and you have to increase your discount margins during the sale period. That can get impacted.
Okay, so instead of cutting prices, you are alluding to a higher discounting in the market. So the market operating price remains pretty much the same.
That's the reason, I'm saying that my GP would remain similar.
Sure. And sir, to the earlier participant, question on non-retail, growth of 5%, and, retail like-to-like growth of 1%. Clearly, quarter 2 is a lumpy quarter for you compared to quarter 3 historically. We see a 10 to 15% decline in quarter 3 historically. And given that your non-retail has grown only 5%, while I understand there are other channels also in that, not only MBO channel, but MBO is the major portion of that channel. Do you see MBOs actually buying less this time around than previously, or you have seen a hit in online or some other channel and not in the MBO channel?
Okay, they buy close to the market. I wouldn't deny that scenario, but realistic picture will get after Q3 how the Q3 has been. So overall, if you want to look at the season, okay, we should evaluate after quarter 3.
So, but typically a MBO, the supply chain also would mean that they would place orders much earlier, not because the sale is already over. Diwali is less than 20 days away. I don't think MBO will place orders today for you, right? They would have placed orders 20 days in advance.
Orders, but some supply chain can remain. Okay, earlier, last year, okay, the supply chain was over by a month of September. This year it is not.
Sure. Thank you. Thank you, sir.
Thank you very much. The next question is from the line of Pramod Dangi from Unify Investment Management. Please go ahead, sir.
Yeah, hi Hemant bhai and Pankaj and entire team. Many congratulations for a good set of numbers. Pankaj bhai, अभी हमको 2 साल हो गए winter wear को. So this time, are we looking at the expanding our distribution reach, irrespective of how the season goes? Will there be a good distribution reach after 2-3 years?
So, Pramod, we have already been able to capture in terms of reach. The question arises how the winter will be and what will be the fresh sell-throughs there.
Okay. And second, Pankaj, we just launched the kids section. So how we should look at it 2 to 3 years down the line, the mix between the legacy jeans and the new apparels? Will it change drastically over the next 2 to 3 years?
Okay, we have tried to keep that uniqueness and we have tried to keep denim as a core category there. Okay, but it's still under incubation stage. Our first season's response has been fantastic. Okay, let it go to the market and then understand. Okay, maybe I'll be able to answer this question in a better way in first quarter of next year.
Okay, got it. Thanks, and congratulations again to both of you and entire team. Thanks.
Thank you very much. The next question is from the line of Yash Bajaj from Lucky Investments. Please go ahead.
Hello. Thanks for the opportunity and congratulations for a good set of numbers. So I have just one question, a bookkeeping question. In our result, there is this line item of manufacturing and operating expenses. Can you help us understand the nature of that expense and why has that reduced on a year-on-year basis? Even though our top line has increased, that has reduced. So is it a variable expense? Is it a fixed expense? It was 15 crores this quarter, and previous quarter, last year, same quarter was 20 crores.
Major impact is only because the inventory has gone down drastically in this cost bracket.
But sir, your sales has increased.
Yeah.
So it is a variable expense, right? It should grow as much as your revenue, right?
There was an inventory carrying, okay, and you'll see that, okay, the inventory carrying, the stock has gone down drastically because of that perspective. Because manufacturing has not been, okay, manufacturing unit could have gone down, right?
So manufacturing, 105.
Hello?
Sir. Yes.
So I feel, okay, it's a mix of three things. Manufacturing expenses is not only labor, but it is also some design inventory cost which comes in the product. So maybe one reduction in terms of the design, okay, which is case of embroidery or something, that cost would have reduced. Of course, second would be the inventory which has gone reduced. Okay, you do it a little. Okay, these two would be the major aspect for this reduction.
Okay. And I mean, ये half yearly भी reduce हुआ है, मतलब September 23 this half year it is 29 crores. And
also I said it also includes one design element where you used to pay. So manufacturing is also used to look some design element which used to be there. Okay. Not only job working as a cost. Okay, not only labor. That's what I'm saying. It's a labor and a design cost structure.
Design.
And design during this period must have gone down.
Okay, sir. Yeah. Thank you.
Thank you very much. The next question is from the line of Namit Arora from InGrowth Capital. Please go ahead.
Yeah, thank you for the opportunity. I have just one question. Sir, your offline strategy has obviously been working very well for you all these years. Just one question. No, your offline store strategy has been working very well for the company all these years. Just one question, that do you need to make some investments in digital technology and online effort also?
Okay, we are we have implemented it, and we have started with killerjeans.com. Okay, on a channel. Okay, online we are already present on third-party websites. So we are increasing our presence. We are increasing our digital presence, but we are doing it slowly and steadily, not one altogether.
Got it. Thank you very much, sir, and all the best to the entire team.
Thank you very much. The next question is from the line of Siddharth Purohit from InvestQ Investment Advisor Private Limited. Please go ahead.
Yes, sir. Congrats for the good numbers. A lot of question has been answered. Just one clarification, sir. With regards to the sales and distribution expenses, you said we might increase on that. So what is the level of, as a percentage of sales we have kept in mind? Because historically it has been in the 5 to 6% band.
We generally consider it as 7%, or any addition to our EBITDA will definitely look at increasing the EBITDA will go into marketing expenditure.
Okay. So any major campaign that we are looking for this year also, particularly, or it will be normal business course?
Of the deals come on a last time period or a last period, so I can't directly give you a number at what exactly is going to happen. But we say that okay, you can say that okay, it's going to remain between 5 to 7%. That's for sure.
Okay. So the idea is that we want to maintain 20% and additional amount should be invested for brand building and more distribution. Okay. Got it, sir. Okay. Thank you.
Thank you very much. We will take this as the last question. I would now like to hand over the conference to Mr. Hemant Jain for the closing comments. Please go ahead.
I would like to once again thank all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out of our IR team for any clarifications or feedback. Thank you. Thank you to all.
Thank you very much. On behalf of Kewal Kiran Clothing Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.